the Gould Mine podcast.
When you're pitching investors, and we'll kind of go into what you're doing there in a second, but like when you're pitching investors, I'm assuming that the main selling points are we're in high growth markets where we're seeing, economic growth, we're seeing population growth. This is an asset class that has like a lot of
that tailwinds is how we look at it.
Yeah, exactly. Yeah. So is that what you're driving them towards, or are you also kind of selling them on industrial, like flex industrial, like for the long term? Like, kind of walk me through that pitch process, right? Like, how are you selling them on the benefits of flex industrial? Because there's a lot of stuff out there, right? So
that's %. Yeah, there's pretty much anything you want to invest in is out there, right? I think one of the biggest things we like to start with is that supply demand story that I already explained, right? Like that's simple investing 101. Supply demand makes sense. People get that. Yeah. The other thing is a big differentiator, right? Like if you're looking to diversify your real estate holdings, if you invest in a lot of LP positions, a lot of funds, that kind of thing, you probably have a lot of multifamily. You probably have some self-storage, and you might have some bulk industrial. But it's like, hey, this is this other asset class that 99% of LPs out there at this point, I would say, probably don't have exposure to, that has a really good runway to be able to continue. So like multifamily, I think fundamentals long-term be great. Next 2 years could get a little frothy. Same thing with self-storage. So it's kind of a new place to, like, if you have money to place right now and you want a new strategy that might be able to continue to see similar return structures that you've seen over the past 10 years in those asset classes, those have been climbing up the hill. We're down here at the bottom of the hill here with flex. Like you can get on that trend still on the beginning side. So that's a big thing that we're selling. The other thing that we're selling is like in the industrial sector itself. Someone's like, hey, I just think industrial is going to do well, whether that's from nearshoring or whatever, or onshoring or whatever the trend may be that they think that they want to be a part of. Traditional bulk industrial maybe have 1 to 3 tenants. So if you have one tenant go out, that's 150,000 square feet out of a 400,000 square foot building, like you're well negative cash flow. We're buying deals that have 20, 30 tenants. So it's kind of the similar like vacancy risk that you see in like a multi-deal or self-storage deal, where it's like, hey, if you lose 2 or 3 or 4 tenants, you're still very cash flow positive. You're still making dividends. It's not feast or famine, like this big single tenant kind of deal. So like that's another big selling point that I think people really understand. And then lastly, the thing we always like to hit on too is like, these aren't repricing daily. Rents aren't repricing daily like hotels. They're not repricing monthly like self-storage or yearly like multifamily, but they're also not repricing like 20 years, like, large retail or something like that. So like we're signing leases like 3-year terms. So like enough term to where we're not like constantly rolling people over, but also we're able to, like, if inflation continues to run, which I mean, I know it's cooling off a little bit now, but I think long-term it will continue to a certain degree, then we're able to continue to kind of market our rents every 3 years as we see things roll. So it's kind of that good in between kind of lease rate as well. But yeah, like overall, those are kind of the points we always want to hit on.
Yeah, it's really interesting. I had a guest on my show and he's in the residential space, but he talked about this powerful new investing approach, which is called like midterm rental, right? Which is like, it's not a short term. It's not like a long lease, but
is that like right 4 to 6 month kind of stuff?
Yeah, exactly. Traveling nurses, they're there for, exactly, 4 to 6 months. And so it sounds like this is the commercial version of midterm rentals, right? Because commercial is definitely like a different beast, right? So longer leases are going to be 5 to 10 years. So this is right kind of in like that medium term sweet spot.
Yeah, exactly. Which is good for like times like this, because like coming through COVID, there were a lot of people that bought, say, I don't know, a 15-year lease Dollar General in 2019, which was great. Well, then you had rents explode coming through COVID, and you're sitting there under market now for another, like 8 years or 9 years, whatever the math is. So like, it's definitely one of those where it's good. Like it's a good medium term. Like you're saying, it's a good sweet spot, and it's good flexible space for tenants. Our tenant base really enjoys that kind of time frame because they're a lot of times needing to grow. And so it's a lot of times like kind of newer companies sometimes that maybe are coming out of like, I don't know, I'm just trying to think of an example, but like an HVAC contractor that maybe rolled out on his own. He was working out of like a boat and RV storage unit for a little while. Now he has a 2,000 square foot little office warehouse. And then in 3 years, he'll need a 5,000 square foot office warehouse. And we can kind of move him within the park as he grows his business, right? So yeah, I think it's a good time frame for that as well on the tenant side.